I'm Harriet King. I'm a director at Platinum Pacific Partners, and my role as a search consultant is focused on credit. And the way that I divide that is across listed markets, which is essentially fixed income, and then private market, which is private debt and special situations. Fixed income, in its most simple term, is essentially debt in the market from corporates and then debt in the market probably from governments and other government-affiliated institutions. And essentially that could be in a bond, which is a very vanilla product, or it could be in a loan or more structured product. Fixed income, particularly in Australia, is a little bit misunderstood. It's kind of a scary asset class that people are a bit frightened of or don't understand. And I think that people generally always think it's just the flip side of equity, which to some extent it is, but I think it's more about debt and understanding positions of debt in the market that need to kind of fuel an economy. A career in fixed income, I think, is becoming a lot more impactful on society simply through sustainable financing and ESG. Now when corporates are issuing debt, so through corporate bonds or through loans, they can often have a sustainable angle to it, and there's a lot of ESG frameworks that will be part of that process. That's an ongoing beast and something that certainly people aspiring to be in investment management can be a part of, and we're seeing that on both the private and the public side of credit. And then more broadly, I think that really interest rates particularly, which is a big aspect of fixed income and just loans in the market, have a really huge impact on general market trends on a global scale but also domestically. The key players in the fixed income investment management market are global institutional fund managers, institutional asset managers, super funds, and then also a growing middle market domestic funds that are raising in credit. The key skills for an entry-level role in fixed income are fundamental research skills. Naturally, candidates would be doing deep research through both analysis of financial statements and models, and also kind of market more probably qualitative documents for assessment. Research is a key skill as well as obviously financial modelling. In their early career, people can build their skills to be a good fixed income investor by being very diligent around their probably commerce or academic backgrounds in study, and then in the workforce being focused on really building a skill that is, if I'm given a bond, can I do fundamental analysis on that? And that's really writing a credit paper and understanding what content is used for a credit paper, and then understanding the end user of that document. On the listed side, so fixed income, the natural segues into those roles is often from ratings agencies. It's from domestic graduate programs where they might be doing some type of institutional rotation through credit-related positions. It could be lending, it also could be researching markets. And I'd say those are mostly the feeder skills that would help you to move into investment management. The opportunities for women in fixed income, I think, are endless. I think that it is an industry that has a lot of really amazing senior female leaders across both all of the types of institutions we've spoken of before, super funds, institutional asset managers, and then also banks. And I think that's super exciting. And all of those women that I've dealt with really are focused on nurturing talent at the junior level of obviously all male and female, but I think that if I run searches, it's very clear to me that females are difficult to find, and I think that if anything, that's a huge opportunity that young girls should really grasp. Private credit is really the private side of the market for lending. So if you imagine, obviously we've spoken about the listed side, which is where bonds are being issued in a public market. This is the private side. So essentially it's businesses seeking financing in a range of risk levels. So it may be basically coming in where a bank can't lend and bridging a gap because it's a slightly risky situation, or there needs to be something more bespoke that an investment firm can offer. But then right up to much more riskier type of deals where businesses are probably highly leveraged already and need to be refinanced, or there needs to be some kind of equity and debt structured into a deal. The way that we cover it at Platinum Pacific Partners is really speaking about private credit and special situations as a group, and that's simply because we can cover obviously the more vanilla type of opportunities in credit where you're lending right through to the really structured ones. A career in private credit allows you to be financing companies that are really at the cutting edge of what could be changing our societies, whether that be to do with climate change, it could be to do with renewables, or even businesses that are kind of highly leveraged and not even making revenue yet, but thinking about the future of our world and how it's rapidly changing. We have actually seen some of our clients do the first ever sustainably linked unitranche deal, which is super exciting on the private side, and I think really shows the thematic of ESG growing on the private side within credit. And I would say that historically, particularly this market, private credit and special sits, has been oriented towards sectors such as property, FIG, so financial institutions groups, and also resources. So the mining market particularly is serviced through credit funds, and that's naturally being picked up because the banks aren't really able to lend into those businesses as much anymore. But a lot of the investors are seeking to bridge the gap between a lot of these businesses going through a transition phase, and that's really exciting. Private credit is a super exciting asset class. The key players are really anything from middle market funds that are raising. We're also seeing equity institutions trying to pivot and diversify their strategies through a private credit strategy, and then large global alternative players. So the biggest alternative funds in the world often have most of their allocation in credit, but in Australia it's a market that has probably taken a while to develop and really lags to the private equity market by about a decade. And I think that's a super exciting opportunity. The growth in terms of capital allocation is huge, but also headcount. Private credit really demands the same skills that we see across all private markets. We look for candidates from M&A, investment banking particularly, but also more than happy to look at candidates from a deal advisory background in any of the big four accounting firms. Really, we like candidates that are transactional, and often actually it's best that candidates come with both a debt and an equity skill set, because the structuring component in these roles is quite heavy. We also do really demand candidates from the big four banks or other lending institutions, because they really understand the process of lending through a structured vehicle to large clients. I would say that investor mindset is very, very important, and I think a lot of people are starting to see a real gap between candidates who are lenders, which is obviously a wonderful skill set, but candidates who use the product to create yield. And I think that real measure of difference in terms of the way a candidate can articulate themselves in an interview is really important. People in their early career can build their skills towards private credit through really focusing on the financials. Really, I think debt and special situations as an asset class is very structuring heavy. It's about thinking around what do we have in our skill set or in our toolbox, if you will, that can structure something into a deal that makes it really appealing for the institution that's being lent the money. And that will be both debt and equity. So a structuring skill set, very mathematical, engineering type brain, really is well suited for this asset class. I think building the skill set is focused on financial modelling, so ability to build leverage buyout models, discount cash flow models, build them yourselves and review them very quickly, and then make a call on a company. Like, is that a good company to invest in? Is it a good company to lend into? If you had $10,000, would you lend it to them to create the yield?